Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's absolutely packed program, I'm going to be looking at and posing the question, is Bitcoin the gift that keeps on giving, or is it the end of the bull market? So we'll have a look at the narrative, what's developing with Bitcoin, by looking at the wider markets as well as a 60-day cycle to try and make head and tail about exactly what's going on. So if that sounds interesting, then without further ado, you know exactly what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. Okay, we're going to go straight into the meat of the video as we always do in every single video. The title is what we normally try and cover right at the beginning, and the question everybody seems to be asking is, have we topped out? Or is this a buying opportunity? So we'll have a look at that from different angles. And as you know, we remain open, fluid and flexible. We don't have a particular narrative. We don't have a permanent bullish narrative or a permanent bearish narrative. Here at Wisdom Bites, we just accept what the market tells us and try and navigate ourselves through the maze, which is the crypto space. So what is everybody talking about? Well, obviously what's happened is over the last week, we've broken through this $60,000 strong support level. And each time we came down to this level, we got bought up very, very quickly, as you can see by the number of the wicks and the length of the wicks all the way here. And similarly, just only a few weeks ago, we had a similar situation. And we also had a look at the previous cycles of what had happened after the halving, and we showed in the previous 3 cycles that around the $64,000 mark, we shouldn't be revisiting anything below $64,000. And this is what happened last week. We came all the way down to a low of 53,500. And the question really is, are we going to now make a recovery back up, or are we going to go further down to these support levels down here? So let's have a look what's going on in the wider markets first of all, to make head or tail about what could possibly happen with Bitcoin. So the first thing we really need to have a look at is the fear and greed index. And just last month we were in the greed phase at 72, and over the last week it's now dwindled down to 28. So we've had the pendulum swing all the way from around here, and we're going backwards to the danger zone, the fear zone. And what we've had is a breakdown of a very stable fear and greed index right up to around about the middle of June, and then we've had this slide since then. But we were holding this level here at 30, and what we've done is to actually dip below the 30 level, this strong support line. So what we've done is we've dipped down to 26 down here and come back and found that as resistance, and now we're coming back, being rejected there. So the question is, which way will the fear and greed index go? So this would suggest that having come back and retested the old support here, we seem to be making our way down. But should we capture this one more time, then it looks like the market's going to start moving to the upside. Obviously that will follow the price, not the other way around. And what we have in the market at the moment is a lot of hope value. So the market is really hoping, because at the end of the day nobody knows what's going to happen tomorrow with Bitcoin. All we can do is to develop a narrative based on the facts in the charts and the news and what's happening with everything else out there with the wider markets. And if we have a look at the liquidation heat map here, we can see that the yellow zones are all on the upper side, not on the lower side. So not many people seem to be very confident of leverage trades on the long side at the moment. So there aren't many stops down here. So there is this opportunity now for the market to go much higher. But as you can see with these yellow zones, and the current price as I'm doing this video is now at 57,000. So you can see there is now a potential for some sort of a rejection at these yellow zones here, all the way up to about 58,000. So we are in an area between 57 and 58 where there are stops which the market may take out before moving to the downside. So there is that potential. But if we can move above the 58, then there are clear skies ahead all the way up to about 59,800. And if we have a look at the Bitcoin tracker from the ETF's point of view, we are still getting BlackRock to be holding an increasing amount of Bitcoin here. So we've now gone up to 307,206, as opposed to Grayscale, which has now gone down from 619,000 to 273,000. And even Fidelity is now coming up to the level of the Grayscale at 273. So Fidelity is now up to 170,000, but BlackRock is now powering ahead. And with the price of Bitcoin falling over the last week, what we've now got is that the ETFs, as we can see here, has now started to jump back to the upside. So these are the total net inflows. So could this be a sign of where the market wants to go? So only time will tell, but we can only have a look at exactly what's happening and the picture outside. And the ETFs are telling us there's a positive move to the upside here. And surprisingly, if we have a look at the Bitcoin ETF overview, obviously the BlackRock has taken over the #1 spot here, but if you look at the last 7 days, the ETF that's driving the number of Bitcoins in terms of the inflows is really ARK here in position number 4 with 3,492. And we can see clearly with the grayscale, the #2 ETF, the number of Bitcoins that is bleeding is still quite substantially high, but certainly not as much as the ARK buying at the moment. So there is a slightly changing picture with inflows now being much greater than the outflows. And you can see that with the visual of more green figures here than the red figures. So just an overall view tells you that there is a significant move for more inflows than outflows. And if you have a look at the monthly picture in terms of the net Bitcoin ETF flows, from around about the first week of June here, what we saw was net outflows in this minus figures here. Whereas in the last week or so now, we're starting to see more of the inflows. Could this be front running the price for Bitcoin to the upside? And if we have a look at the wider markets, we can see with the dollar, especially here, having mentioned last week in last Monday's video, when we were around about here, that we're in this symmetrical triangle with the dollar, and we've got these support lines here, and that there was a high probability of being rejected at this point with these candlestick patterns for the dollar to come back down and retest this support line. And there is a much greater chance for the dollar to now fall through that, because we are now testing that for now the 4th time. And the understanding with these symmetrical triangles is that once you get 70% from here into the triangle, this is where there will be a breakout. So we are now on the verge of a breakout, and the question is, do we go back up here and break to the upside, or do we break down here to the downside? And as we've seen with Bitcoin, while the dollar has been coming down, Bitcoin has also come down. So there now seems to be more of a correlation rather than an inverse relationship. But when we look at the wider markets, it's giving us a completely different picture. There seems to be a decoupling or a divergence away from Bitcoin. The first one to look at is the SPX, and there seemed to be last week more of a sign that we're getting into the 60-day cycle low here, having made a right translated cycle, that there was an opportunity for it to come back down and retest these levels one more time at around 5,200. But what we've got instead is the market's just powering ahead over here. So there may still be a little bit more to go before we do expect some sort of a decline, maybe down to these levels rather than to these levels here. So a lot of underlying strength in the SPX 500. And when we look at the SPX on the monthly chart, we can see quite clearly here that what we had at this point of the previous high back in November 2021, just like Bitcoin, we created this cup and handle pattern here. And since then, what we've done is to break out from that pattern, the previous high at this point, and now are barging through in the rest of the bull market here. Of course, you're going to get your oscillations to the downside, but the general trend seems to be on the larger time frame to be on the upside. So we're still very much intact with the bull market as far as we can see here. And with the specter of the interest rates coming down sooner or later, it looks like it's going to provide a little bit more fuel for the market to keep on going. And the question is the SPX front running Bitcoin? Because Bitcoin hasn't actually broken out from its previous all-time high level of around about the 69,000. We've gone as far as 73,000, but we haven't really decisively broken out like the SPX. And many times, as we know, these markets front run the Bitcoin price and sometimes vice versa. But it's certainly very interesting to know what's happening with the SPX. And if we actually zoom out, we can see that there is a large long-term trend with the SPX that stretches back all the way down to the last recession that we had back in 2008-10. So what we really got from that point is a massive trend to the upside. And of course, we've had our dips along the way. And now looking back in hindsight, you would think that these were the points of actually buying up the opportunities at these dips here, because after each one, the market has actually been going to the upside. So these are the points that when you zoom out and take an open, fluid and flexible approach to the market will always reward you for that approach. And a similar picture seems to be emerging with the gold market. We can see this quite clearly on the monthly time frame. Whenever you zoom out, you get a much bigger overall picture of exactly what's happening and not get caught out by the short-term emotional responses and changes that's going on in the market. So quite clearly, we've broken out amongst this very strong resistance point over many years over here, as you can see, going back all the way to 2011. And we've broken out above that level here. And now just consolidating those gains with these wicks, you would have expected with these long wicks at the top for a much bigger correction to the downside. And if we move on to the weekly chart, we can see a particular picture developing here. So what's happening with gold, having had this gravestone doji candle, which would have been the catalyst for a move to the downside before we continue and resume the bull market. But instead what's happened is that we're now consolidating at the top of that gravestone doji candle and at the bottom. So we're using this as a consolidation pad, and sooner or later this is going to now break as a continuation pattern to the upside. And we've got the 61.8 marked out here because that was a higher probability play. It obviously hasn't played out. So that gives us more information in the sense that we can see quite clearly there is a lot more underlying strength, and it increases the likelihood of this breaking out shortly to the upside, of course. So people are buying up the gold, not allowing to get back below these levels here. But the main thing here is that with gold, we have broken out from its previous neckline, which would be the equivalent of the previous all-time high for Bitcoin at 69,000. So once again, is gold telling us that this is what's about to happen with the Bitcoin as well? And of course, with the decline that we've got with Bitcoin, it may not look like that this way, but you need to just take the emotion out of the shorter term moves that we've had in the last week or two. But when you zoom out on the larger time frames, it gives you a completely different picture. And similarly for silver, when you look at the weekly chart here, very much the same situation with a breakup from the neckline here of the previous all-time high. And then we've gone as high as this level here at around about the 30 level, come back and retested that neckline. And we've done is moved ahead, powered ahead to this point at around about the 32 and now consolidating just like gold. So once again, this is a continuation pattern to the upside. And before we go to the 60-day cycle, I'm going to look at the monthly chart for Bitcoin and pose one question, because there is a growing narrative out there that we may well have topped out and we've come to the end of the bull market. And as you know, I keep an open, fluid and flexible approach. I would not be wanting to dismiss that idea, but we just want to have a look at the facts. I would put that particular probability of the market topping out at much less than 10%. And the reason for that, for me, one of the major signs that we've come to the end of the bull market is always the 8 EMA, i.e. the 8 exponential moving average on the monthly time frame. And if we zoom in on here, the blue line here is the 8 exponential moving average. And it's always very healthy for the market when it's gone up so much as it has over the last 12 months or so, for it to come back and retest that 8 EMA. And what we've now got is, as long as we don't close below the 8 EMA on the monthly time frame, i.e. at the end of July, for me anyway, the bull market is intact. Because when we look through the previous cycles, you'll see why this is very important. So this chart is really for those of you who are panicking and wondering whether we've come to the end of the bull market and thinking of actually selling everything up and then going on a holiday and sitting on a beach and crying into your beach towel. So let me show you the overall picture before you book your holidays to the beach. So these are the tops of the bull markets at the end of 2013, then the end of 2017, and the end of 2021. So these are the previous 3 cycles that we have. So leading up to those tops of the bull markets, we can see quite clearly that the blue line here, the 8 EMA, was a very strong support all the way up to the end of that bull market here. But as soon as it broke below it, that was the end of the bull market, and we were now into the bear market. And then you get your period of consolidation. But once we broke above the 8 EMA, once again, it provided a very strong support all the way to the top of the 2017 bull market. And similarly, once we broke below the 80 EMA one more time there, that was the catalyst for the bear market one more time. And then the same thing repeated again. We broke above the 80 EMA and we followed that all the way up until we had this double top. So this was an anomaly which will happen. And for those of you who just want clean cycles, that everything has to happen every single time, that is really not a realistic perspective. We always have to accept that in each cycle, different things will happen. And here we fell below it here to give the impression that we're going now into a bear market, but we came back up for a double top. But once we fell out of that one, at this point here, around about March 2022, that was the catalyst for the bear market down here. So this is what we really need to be looking out for, because that is the sign that once we break below the 80 EMA on the monthly time frame, that is the time to get worried. And as I say, the probability to me at the moment is only around about less than 10%. But it's a possibility that we have to be aware of, because we are open, fluid and flexible. We will never dismiss any narrative with the Bitcoin price. We are here not to be stubborn, expecting Bitcoin to do what we want it to do. At the end of the day, we have to respond with what Bitcoin is telling us. And if it moves up, then we have a different narrative. If it moves down, we have to change our narrative. It's just very sensible and logical and intelligent to do so. So this is where we are at, having had a look at the previous cycles and knowing that this is what's happened in the past to give us a clue of what may happen in the future. So now this is the current picture as I'm doing the video here. The blue line is at exactly 56,600 and the current price is at 57,600. So we're well over $1,000 above. Obviously this is a monthly candle. We have to wait for it to close. But at the moment, it's showing all the signs that we are currently in a bull market. Now, if your narrative is that we are in a bear market and that the Bitcoin price is topped out, then you have to act accordingly. But the danger with that will be, if we zoom out a little bit, if you think that this is a triple top, which many people have been suggesting, and you're expecting the price to come back down here, and if the price then holds the 8 EMA at the end of this month, and then starts making a move here, then the only logical place for you now then would be to catch the Bitcoin price above the 73,800. So if you're going to sell out at this point around about the 54, 55, 56,000, expecting this move to the downside, then your only logical place to come back into the market would be above 73. So this is what you would lose, this bit here, the consolidation part of the Bitcoin range. And I'm never going to dismiss that idea simply because this is Bitcoin and anything and everything is possible. But we always have to look at the realistic narrative, and it's all a game of probabilities. Nobody can say for certain where this is going. But what we can say with the narrative that I've just shown you, with the ETF starting to have more inflows and the wider markets like the SPX going up, the gold markets moving to a higher position, as well as the silver, and the dollar coming down, and with the expectation that interest rates are about to come back down. It may not be soon, but over the next 5-6 months, we do expect the interest rates to be coming down. So when you look at the bigger picture and the narrative, to me, the higher probability is for Bitcoin to be creating this current pattern, which people may not still be aware of. What we have is a classic cup and handle pattern developing here. And as with gold, as with silver, as with the SPX, the Bitcoin price seems to be a little bit behind those markets. And if they are front-running Bitcoin, which we expect this to be the case, then this is what I would be expecting. So when people ask me, am I worried about the current price action? No, I'm not. So with the narrative that I've painted for you so far, my particular view of the whole thing here, as per the title of this video, is that this particular candle is the gift that Bitcoin always gives us as it's going up in a bull market. We've had many gifts along this way at these dips, all down here, and now we've got another gift here. So for me, the Bitcoin price currently is a gift that Bitcoin keeps giving, which very few people take advantage of. So this is where I'm buying more and more of my Bitcoin miners. So this is why I want to look at the 60-day cycle, so that from that perspective, what is the Bitcoin price telling us from a cycles point of view? Okay, so this is the 60-day cycle, and I've marked out this particular candle which came down all the way down to about 53,500. Our previous cycle low was this one here at day 54, and the expectation here was that we should now move to the upside, which is exactly what we did. But one of the things that I mentioned at the time was that we need to get above this candle, the low candle here, and that was at 63,300. And unfortunately we saw a gravestone doji candle at that point. So while it protruded above the 63,300, we did not close above it. So that was really a sign, a signal that maybe we may have another leg down here. And as soon as we broke below that level, what we've now done is to put another tentative bottom at day 65 on this cycle. So put a question mark, because there is still always the possibility it can go lower, but we are really at the end of the 60-day cycle here. So we're within the range of a bottom being put in. And that's why the day 54 was a tentative bottom, and this is again a tentative bottom on day 65. And I'm measuring that from the previous cycle here on day 42. So the current day 65 was here on last Friday on day 65, and today we are on day 68. So let's see if we break below this. What we've done is to leave a long wick at the bottom, and we always know that with long wicks at the bottom the pressure is to the upside, and with long wicks at the top the pressure tends to always be to the downside. So these are the signals we always have to keep looking for, and certainly having made that long wick at the bottom here, it gives us some hope, some probability that we are to move to the upside here. But to confirm this bottom at day 65, we now have to get above this gravestone doji candle, and that is exactly at 63,794. So if we call that 63,800, if we can get above that, that will be the confirmation of this bottom on day 65 of the cycle. And because we're so deep into this cycle, there is quite a high probability that that is now the 60-day cycle low, and we're moving now into the midpoint of the next cycle. So apart from the monthly 8 EMA, another sign that we could well be having a top out. So at what point would I get worried about the Bitcoin price? So at what point would I get worried about the Bitcoin price? And this is something we just have to be aware of. It's a low probability play, but it's something, like I say, we have to be open, fluid and flexible. The markets aren't going to do what we want them to do. They will do whatever they want to do, and we just have to respond accordingly. So the way I'm seeing this now, having put in a bottom here, so far at around about the 53,000 mark, the danger that I see when we zoom out here is like this one here, the M pattern. So when you get these M patterns and you break below that, that's when you get a big move to the downside. And so this is what we really have to be aware of. So while we expect the market to be doing this and going back up towards the 73,000 and then breaking up and following the SPX and the gold and the silver, we always have to be mindful of what could happen to the downside. So what we have to be aware of is this particular move here. It comes back up here and then it starts making all the way up to maybe 70, 72, 73,000 one more time. And if that gets rejected at that point, and then we lose this M pattern, the middle of the M here, this point there, if we lose that, that would probably bring this down to below the 8 EMA on the monthly chart as well. And losing this here would then be a danger sign that we have actually topped out. It's not something I'm expecting, but it's something I'm aware of. So at this point here is where I would be looking to reduce my positions quite drastically. And the probability of that happening, like I say, is around about less than 10%. And so far what we've done is we've gone from 73,800 and the low of the cycle so far down to 53,400 would be about 27%. So we've had a 27%. This is the largest fall that we've had since we had the start of the bull market here at 15,400. So we've had these 20% all along the way here and here, but for the first time it's gone much lower to the 27%. And if we zoom out to the previous cycles, we can see quite clearly we've had much bigger moves to the downside here and here. So this is not abnormal as far as Bitcoin is concerned. This is part and parcel of the ebb and flow of a bull and the bear market. And currently we're in a bull market, and this is the ebbs and flows that you would normally get. It's nothing to me anyway to be worried about. And as I showed you with the SPX chart, these things here at these lows are your opportunities to dip into the market and buy more of the Bitcoin. So people talking about what strategy should we be following, I can only share with you my strategy, and that is that as long as you believe you're in a bull market, that's the absolute foundational premise here. And if you think that the market has topped out, then you need to take the action accordingly. But for me, we have not topped out. This is just the normal ebbs and flows of the market dips that we're going to get along the way. So 90% probability for me that we're still in this uptrend on a bull market run, which should last anywhere between 6 to 18 months. So if you have that assumption that we're in a bull market, then we always have to, on balance, remain fully invested, because you never know when these dips are going to come along. And when they do come along, you just have to ride them. That is the challenge of the journey from where we are to the end of the bull market. So for me, I'm fully invested, as everybody knows, in the Bitcoin miners. And my strategy has been that when I got in at the bottom exactly here, this was my first entry and this was my second entry with the Bitcoin miners. My investment strategy was to be fully 100% invested here and use these dips that we have as opportunities to add to positions, because the more positions you have here, when we eventually break out at this point, you're going to have an exponential move on your holdings. So it's a very simple strategy which seems to be working incredibly well and far better than even I expected. And as Warren Buffett said, when everybody is fearful at these points, you have to be greedy. So while everybody's expecting this now to go down, nobody's buying here apart from the 5% of the smart investors who believe this is a bull market. And if they're proved right, this will be another wonderful opportunity to accumulate. And before I show you what's been happening with the Bitcoin miners, I just want to give you the targets for the downside in case the Bitcoin price does come back down. So the one to watch out for is this white line here. This is the 50 simple moving average on the weekly time frame. So we've lost the 20 simple moving average. As this is moving up, this may go sideways and meet it up here somewhere. Obviously it can fall down to where it is. So these are then the levels here. When you look left, you'll see that there are these price action clusters which give you the support lines. And of course the first cluster here is the 50 to 52,000, because when you look left all along here, this was a very strong resistance point here, resistance here, and we found resistance and support along here. So obviously that was our target last week, that this shouldn't fall below this level, and we still are intact with that. And that would allow the 50 simple moving average over the next few weeks to climb back into that zone. So this looks, with all probability, going to be the strong support level. But should it fall out of that, then you've got a cluster around about here between 46 and 48. And that's to do with these resistance points when you look back in history. So you get this point here. We had a big bounce at this point back in 2021 at 46,000. And then this level here, resistance at 48,000. And when we came up to those price levels, look where it got rejected, right at that level. So should we fall below the 50,000, then there is a very strong possibility we will get support at the 46 to 48. And anything below that would be incredibly worrying, because that would lose the 8 EMA on the monthly time frame. So it's a probability that's very low at the moment, but it's obviously something that we need to consider. So for those of you who are interested in the Bitcoin miners and want to know exactly what's happening with our portfolios there, so while the Bitcoin price has been going down over the last few weeks, the Bitcoin miners seem to be doing quite reasonably well, relatively. And that is that with a portfolio that we started right at the beginning of the bear market, at the beginning of 2023, with around $100,000, we ended up with over $430,000 at the end of 2023, which is now up to $481,000, while the trading portfolio, and this is the key part of this really now, is that the trading portfolio where we do the trades, i.e. swing trades or the ratio trades, That is now up 36% from the beginning of this year to just under $600,000. And we have a target there of $5 million. When we hit the $1 million mark, that's when a lot of people will join the private member section. And this is what really happens. Instead of joining at the lowest point when there's opportunities like there is now, people will join when they can see the market going up. So these ratio trades are really between the different miners at relatively different rates. And the key is to catch them at the points where they're reversing. So while Bitcoin's been just going sideways over the last few months, and since the beginning of the year, the Bitcoin miners have been going very similar. And yet in the same period, while the markets have been consolidating, we've been able to do just over 20 trades in that period. And especially since March, as you can see from the 11th of March, around when Bitcoin topped out at 73,000, and it's been going sideways and downwards and consolidating, this is where most of our ratio trades were. And these ratio trades are probably the safest way to trade because we're just moving from one Bitcoin miner to the other. So at any one point, the risk of the market running away from you is just not there. And the results so far, when I scroll down here, have been incredibly remarkable. And we are in a number of trades, with the latest one starting on Friday here between Marathon and Cypher. But you can see with these results so far that while the Bitcoin price and the Bitcoin miners have been going sideways, the ratio trades between the different miners, and by picking them up at the points where they're reversing against each other, at the low points and the high points, has given us these types of results so far. And you might think that these aren't very spectacular, but that's exactly what they're meant to be. Ratio trades are between the moves of the Bitcoin miners against each other within a particular consolidation range. So the secret with the ratio trades is to nibble away 13%, 14%, 28%, etc. So you'll get a lot more of the trades. So you're just basically moving in and out of them and nibbling away at these profits and adding to the positions, which will then add into the trading portfolio, increasing your position. So when we do eventually get a breakout above the 73,000, you're carrying a lot more units, and therefore there's an exponential growth in the final phase of the parabolic move. And for those of you who want to look at our record for the swing trades, we began those back in 2023 in March with these types of results here, as you can see. And then the second round in July last year. And in August last year, we got stopped out with the failed Bitcoin cycles. And that's the beauty about having the stop losses. If you get stopped out, you're not losing too much. But on the gain side, you're gaining a lot more. And then in round 4, we got these gains, and round 5, we got these gains here. So this is what we were doing last year during 2023, doing the swing trades. But this year, it's more appropriate to just nibble away while the market is consolidating. And the more the market consolidates, the longer the market goes on, then the more chances are of us picking up these amounts of trades here. So for me, anyway, I'm very happy for the market to keep going until the end of 2025, because it gives us the opportunity to do more ratio trades and pick up more positions along the way. And if that's something that you're interested in, then you can join us by clicking the join button below any of my videos, and also in the description, and also in the video description. So there's the join button there below my videos, and also in the description box here. And for the price of a coffee per week, you can join us with 2 videos a week on a Wednesday and a Friday. And going forward, we're focusing more and more on developing our portfolio and growing that by doing the ratio trades and looking at all the opportunities that are available. So these are the opportunities that are available. We were able to take a trade from here down to this level, and then from back here to this level, and we're currently now back in at this level here, expecting a price to go back lower. So this is where we do the ratio trades between the different miners. And this is our narrative at the moment. We are consolidating on this cup and handle, as I showed you earlier on. We're expecting a breakout at this point. And if it's going to be a left translated cycle, which is looking increasingly unlikely now, with the amount of consolidation that we've had over the last many months, which could obviously continue yet for another month or two, if not more, the more likely route is this one here. And for me, holding on to the Bitcoin miners, this would be an absolute gift, because the longer this goes on, the more opportunities for the ratio trades. And also, if the market goes on for longer, we expect the price to be much higher. And why would I say that? And if we finally have a look at the Bexit indicators, the main one being the Pi cycle, something incredibly interesting developing there. So we have this pi cycle indicator here, the red line at the 350 simple moving average, and the green line, the 150 simple moving average. These are the inputs if you want to have a look on the pi cycle, and this is the style that I've got down here. And the thing to note here, very importantly, is that the green line is now pointing down. So it's obviously going to take a lot more longer for this to come back up, where we expect it to actually cross the red line somewhere up here, whatever that's going to be at the end of 24 or 25 increasingly now. So the longer the green line takes to hit the red line, the higher the price is going to be over a longer period of time. And for those of you who have been following the Bexit indicators, will know that this is another sign that the market hasn't topped out yet, because the green line, which is traditionally in each of the 5 peaks over the 3 cycles, has always crossed the red line, and that has always been the top. You can see quite clearly that hasn't even happened yet. Even when we zoom out, we can see how far apart they are. And this is where it peaked out last time at the 64,000. This is where it crossed over. And the other indicators I showed you last week are obviously much more further apart this week than they were last week, because the price has come down. So again, another big signal that we are still in the bull market with a higher probability. Okay, so I'm going to leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so. And if you got any comments, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.